Somewhere between a factory floor in Chicago and a customs checkpoint in Guangdong, a US-made electric motor just stopped dead over a missing piece smaller than a breath mint. That piece? A rare earth magnet China now controls and just stopped exporting. And here's the twist. Ford didn't wait for a workaround. They shut down the line. Now, American manufacturers are whispering something they weren't supposed to say out loud. What if we just move the whole thing to China? 5 years of trade war, billions in tariffs, and the endgame might be begging Beijing for access. You thought this was decoupling? China just turned it into a trap. China's exports to the US dropped 21% in April, but the collapse is even more brutal in the other direction. US ocean container exports to China fell 77% from March to April, crashing to just 57,300 TEUs. According to Panjiva via CNBC, this trade freeze follows Trump's April rollout of reciprocal tariffs. But the fallout isn't ending in lost shipments, it's redrawing supply chains entirely. The Wall Street Journal reports that major US automakers, fearing rare earth shortages, are now weighing relocating motor production to China to sidestep Beijing's magnet export restrictions. What was meant to repatriate industry is now pushing it deeper into China's orbit. And the next move in this standoff may be the most unexpected yet. China's redirection strategy is paying off. From January to April 2025, Beijing's trade surplus with Europe hit a record $90 billion, and analysts expect that figure to top $250 billion by year-end, according to Shipco News. The US, meanwhile, saw a 78% collapse in total ocean exports in April alone. Chinese exporters are bypassing US buyers by leveraging Europe's massive demand and a yuan that recently fell to a 13-year low against the euro, boosting price competitiveness. French and German importers, already facing post-tariff supply disruptions, are doubling down on Chinese goods as American shipping lanes go quiet. But the next battleground isn't just about where goods are going. It's about who's paying the cost to keep them moving. Facing consumer backlash, U.S. retail giants are demanding that Chinese suppliers cover up to 66% of Trump's new tariffs, according to the South China Morning Post. But with razor-thin margins and price floors already stretched, Chinese manufacturers aren't capitulating. They're repricing, rerouting, and refusing. Beijing's exporters have begun slashing prices 5 to 10% and redirecting shipments to Asia, the Middle East, and Europe, where tariffs are lower and demand is rising. Besant's public claim that China will subsidize U.S. importers remains speculative. No independent data supports that assumption. The logic collapses under scrutiny. If exporters absorb the costs, they risk bankruptcy. If retailers absorb it, prices spike. If consumers absorb it, demand collapses. But the real twist? That contradiction is already shaping where factories open next. And it's not where U.S. officials expected. Trump's tariffs were designed to punish Chinese exporters and reshore U.S. manufacturing. But, April's numbers show the opposite. Total U.S. exports fell to 57,300 TEUs, down from 265,500 in March, a 78% drop, according to Panjiva data. The decline is tied to China's retaliation tariffs on U.S. goods have surged into the triple digits, especially for high-value industrial inputs. According to U.S. steel trade data, 26% of domestic steel and 44% of aluminum is imported. Doubling tariffs on those metals has jacked up U.S. production costs, making American-made products uncompetitive abroad. So, while political rhetoric hails reshoring, actual factory orders are vanishing. And what's happening to the goods that are being made? Well, that depends on whether automakers can still build them at all. With Beijing tightening control over rare earth magnets, materials essential to electric vehicles and defense systems, U.S. automakers face a binary choice. Find a workaround or shut down. China now controls over 90% of the global rare earth magnet supply and requires new export licenses, which are being slow-walked or denied altogether. According to the Wall Street Journal, multiple U.S. car makers are considering moving production to China, where assembling magnets into motors remains legal under current restrictions. Ford already halted production at its Chicago Explorer plant in May due to magnet shortages. A supply chain manager told the Journal, "If you want to export a magnet, they won't let you. But if it's inside a motor, you can." The loophole is clear. The consequences, less so. If this is victory, why is everyone fleeing the battlefield? Trump's tariffs were meant to corner China, but the scoreboard tells a different story. U.S. exports to China fell 77% in a single month, and instead of reshoring, American manufacturers are considering building new plants in China just to keep assembly lines moving. According to the Wall Street Journal, Ford had to suspend production at its Chicago Explorer plant in May due to a shortage of Chinese rare earth magnets, which are now blocked by export controls unless assembled into finished parts. Meanwhile, multiple U.S. automakers are actively reviewing whether to relocate motor production inside China to legally access those materials. If this is what victory looks like, factories uprooting themselves and moving closer to the supplier, then what happens when the next component gets cut off? Beijing isn't just surviving without the U.S., it's recalibrating. According to Apollo Research, U.S. companies generate over $1.1 trillion annually from Chinese consumers, revenue that is now vulnerable to Beijing's pivot toward local brands. Data from Chinese exchanges shows that 85 to 90% of revenue for listed firms now comes from domestic buyers, with U.S. exposure shrinking to single digits. In the first 4 months of 2025 alone, China ran a $370 billion budget deficit, up 50% year over year, fueling stimulus that's boosting internal consumption. While Luckin Coffee gains ground against Starbucks and Xiaomi undercuts iPhone sales, U.S. firms risk watching their largest growth market evaporate. Not from sanctions, but from substitution. And Beijing hasn't even given the formal directive yet. Here's the legal backdoor no one in Washington predicted. You can't import Chinese rare earth magnets anymore, but you can import motors that contain them if they're assembled in China. The Wall Street Journal reports that this exemption is driving U.S. automakers to consider relocating production lines to China, specifically to access block components through final product loopholes. A supply chain executive quoted by the Journal put it bluntly, "If you want to export a magnet, they won't let you. But if it's in a motor, you can." Automakers are running the math. A factory move might cost millions, but a stalled line could cost billions. The ban was designed to cut off the West. Instead, it's drawing it in. Last week, China activated a national tracking system requiring rare earth producers to disclose client names and trading volumes, according to Reuters. This surveillance infrastructure gives Beijing real-time visibility into where its critical exports end up, and the authority to shut them down instantly. The move follows the April export licensing rule and escalates control beyond tariffs. Now it's about mapping the enemy's supply lines in full. Washington restricted China's access to AI chips. Beijing responded by tightening the screws on U.S. access to essential inputs like terbium, dysprosium, and scandium, used in everything from EVs to fighter jets. What began as a tit-for-tat has now evolved into industrial leverage warfare, with both sides targeting the other's nervous systems. But one side holds the minerals. The other holds the dependency. So the story we were sold, about American factories coming home, about China blinking first, about tariffs rebalancing trade, is disintegrating under the weight of the data. U.S. manufacturers are negotiating rent in China. Chinese consumers are walking away from Western brands. The export war has triggered a supply chain migration, not a return. And the next round won't be decided in ports or press briefings. It'll be decided in the guts of EV motors, chip fabs, and battery plants. So here's the question for you. Will the U.S. economy adapt fast enough to survive being locked out of the very components it once outsourced? Or are we already too far behind to rebuild the system we once gave away? Drop your thoughts in the comments, and if you think this is the end of the trade war, brace yourself. Because Beijing just locked the next door. We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.